Warren Buffett just sounded the alarm. A real estate storm is brewing. A massive $2.7 trillion debt is about to hit the U.S. real estate market, and folks, this could spell disaster for the unprepared. But here's the kicker. Warren Buffett is dumping stock as we speak. And he's not just offloading any stock. He's selling off his Bank of America shares. That should tell you one thing. Warren Buffett knows something you don't. Today, we're diving deep into the massive financial storm gathering over the U.S. real estate market. We'll break down the $2.7 trillion debt crisis and how you can potentially profit from it. If you're ready to learn how to capitalize on this once-in-a-lifetime opportunity, stick with me. First, let's break this down. There's a looming $2.7 trillion worth of commercial real estate debt that's about to mature in the next 20 months. This is no small number. To put it into perspective, this debt maturity is bigger than the 2008 crisis that caused the global financial meltdown. You remember that, right? The housing crash that led to a banking crisis? Well, history is about to repeat itself. Now, when this debt was originally taken on, interest rates were between 2 and 3%. Fast forward to today, and the rates have skyrocketed to 7%. That's a massive difference. And you're about to see how that's going to hit the commercial real estate market like a freight train. Let me give you an example. Let's say you have a $100 million loan on a hotel in New York City or Chicago. When the loan was first issued at 3.5%, the annual interest payment was about $3.5 million. That's manageable. But now, at 7%, the interest payment has doubled to $7 million. Do you see the problem? With the loan doubling in cost, the property's income isn't changing. It's still only generating $5 million per year. The result? A loss of $2 million annually just from the interest payments. That's a major issue for any property owner. The impending collapse of commercial real estate. Though, what happens when these loans can't be paid? The property's value drops dramatically. It doesn't matter if it's in a prime location like New York City. If the debt exceeds the income generated by the property, the bank won't approve the loan. That's what's going to cause a massive correction. We're seeing it already. With the debt soaring, properties will lose value and owners will be forced to sell at a loss. Imagine paying $130 million for a prime property, only for it to be worth $48 million next time it trades. This is not hypothetical. This is happening now, and it's going to happen on a massive scale. But here's the good news. This is where the opportunity lies. Warren Buffett is sitting on more cash than he has in years because he knows that when the market corrects, there will be deals to be made. A lot of these distressed properties will be sold at a fraction of their original value, and savvy investors will be able to swoop in and make a fortune. How to take advantage of the real estate collapse. Now let's talk about how you can take advantage of this once-in-a-lifetime opportunity. If you understand the numbers behind the deals, you can buy real estate at a steep discount. Let's say that hotel I mentioned earlier is worth $100 million, but due to the interest rate hike, it's now only worth $48 million. This is where you, the savvy investor, come in. You can go to the bank and say, look, the property's income hasn't changed, but the debt has. What can you offer me? Discover. Here's a quick hack. If the bank is willing to offer 80% of the property's income, you can calculate that they'll lend you about $48 million on a $100 million property. That's a massive drop in value. You're getting a $100 million property for $48 million. That's how you take advantage of this market. Buffett's next big move, why he's positioning Berkshire for the coming economic tsunami. Warren Buffett, often dubbed the Oracle of Omaha, has long been known for his careful, calculated approach to investing, but lately his actions and inactions have hinted at something much more significant. As the world grapples with economic uncertainty, many financial analysts and investors are wondering, is Buffett preparing for a market tsunami? Berkshire Hathaway's $325 billion cash pile tells a story of caution. While most of the investing world has been racing to make moves in the market, Buffett has been holding on to his cash at a time when inflation is high and market valuations are shaky. He's been selling off large portions of stocks like Apple and trimming other positions, signaling that he's bracing for a potential downturn. Why is Buffett sitting on such a massive cash hoard? It's not that he's lost his touch. Far from it. Buffett has always been known for his patience, waiting for the perfect opportunities. With the market facing headwinds from rising interest rates, inflationary pressures, and geopolitical uncertainty, it seems Buffett is positioning Berkshire Hathaway to weather the storm. In fact, Buffett has made it clear that he's anticipating a storm on the horizon, a correction, or even a crash. This caution isn't just about keeping cash in hand. It's about making sure that when an opportunity finally presents itself, Buffett and Berkshire Hathaway are ready to strike. Whether it's a massive buyout, an undervalued stock, or a strategic investment, Buffett's liquidity gives him an unmatched flexibility to act swiftly when the moment is right. But the real question is, what's he seeing that the rest of us aren't? Is Buffett predicting a massive economic crisis, one that could bring the global economy to its knees? If so, his approach could be the best way to navigate these troubled waters. Warren Buffett's strategy and why you should follow his lead. So, why is Warren Buffett stacking up on treasury bills instead of stocks right now? Why is he pulling out of his Bank of America shares and holding on to cash? It's simple. He knows that the next wave of billion-dollar real estate deals is coming, and he's positioning himself to profit from it. Buffett understands that the real estate market is heading for a correction, and that cash is king when it comes to capitalizing on distressed assets. He's waiting for the right moment to strike, and you should be too. Now the clock is ticking. That $2.7 trillion worth of debt is going to mature, and when it does, the floodgates will open. Prices are going to crash, and opportunities like this only come once in a lifetime. Will you be ready to seize them? Will you follow Warren Buffett's lead and prepare for the storm? If you want to learn more about how to profit from this real estate collapse, make sure to hit that subscribe button so you don't miss out on the next video. We'll show you exactly how to navigate this market and build wealth during one of the biggest financial shifts of our time. Don't wait. Start preparing now.